Welcome back. You're watching Indian Open. Well, this point in time, let's see how the markets, or rather the Asian markets, are faring. And we're not seeing too much traction. We are seeing some gains for the Nikkei and the Shanghai. Both of them are advancing around a little over, well, I would say 0.3%. It's a little more for the Nikkei. And as far as the SGX Nifty futures is concerned, it's quite flat at this point. So we'll continue to keep attraction, but we're not expecting too much in terms of participation, especially certainly not from foreign institutional investors, but we'll be watching out for that. But on that note, it is the final expiry of this year. Let's take a look at how things are panning out here. We have Navneet Saluja D'Souza who's standing by to give us an update on the F&O setup. Navneet, good morning.
Good morning to both of you. Well, there was selling pressure seen in Tuesday's trading session, but remember, we defended the 12,200 mark, and that's something we'll be watching out today as well. Overall, of course, there was selling which came in the last hour of trade after Bloomberg reported that the government may not be able to meet its divestment target. So across the series, Nifty open interest was down about nearly 3%. We'll be tracking the final rollover figures today, but day before yesterday it stood at about 54%. For Bank Nifty across the series, we did witness some fresh positions being added, so open interest was up about 5% there, and the rollover stood at about 50%. In terms of volatility, India Volatility Index, despite of markets ending the day with cuts, you also had India VIX, which closed below the mark of 12, so that's been trading very close to its July lows that we had seen. In terms of what levels to watch then in today's session, distribution wise, 12,300 call remains, that level remains as a big resistance because there's a lot of open interest concentration here, whereas on the put side it is at the 12,200 strike. There was more writing seen on the call side, so you had the 12,250 as well as the 12,300 call strike, which witnessed open interest addition. So I think for today's expiry range you can watch out will be 12,150 at least on the downside to about 12,250 on the upside, and of course put writers ran for cover in Tuesday's session. In terms of individual stock futures, then there were a lot of stocks which were in focus. We did see open interest addition coming by across the series, but Yes Bank surprisingly witnessed fresh long positions. Reliance, which was down for the third straight day, saw fresh shorting on the future side. United Breweries was up and about, so short covering was seen there on the future side, and Nalco after a while surged about 4%. Short covering seen there as well. FI data, they sold on Tuesday in cash, and even on index futures we did see some shorting coming by. Almost closer to 3,000 contracts were added. They unwound their long positions, but I think it was the index options data where a lot of put longs were added. Nearly 20,000 contracts were added there, while unwinding was seen for the long contracts in the form of call long as well as put short. With that, it's back to you guys.
Well, thanks a lot for that, Navneet. Interesting day because it's the monthly, yearly, decadal expiry. We'll watch out for how the fun and games happen in today's session. Volumes might be high, even though activity across the globe might be low. Parthiv Shah, director at TRACOM Stockbrokers, joins us right now on the show with his thoughts of how is he approaching markets and investing right now. Parthiv, good having you. Thanks much for joining in. Parthiv, can't not start by talking about that announcement or what the Bloomberg wires reported on Tuesday late trade about the BPCL divestment not going through. That kind of soured the sentiment in a meaningful way. That was the turning point, I guess, for the index as well to come off, and the likes of BPCL, Concord and all the PSUs also came off. Do you think that the market will continue to remain disappointed, or has the move already played out?
Good morning, Neeraj. See, Neeraj, I think the target in terms of disinvestment for this year was at 1 lakh crore and slightly above that. And we were knowing the fact that in terms of the revenue shortfall, the government is definitely far behind in terms of what it needs to achieve. And all the tax collection numbers have been haywire in terms of the growth, I think, which even RBI was constantly downgrading. And even I think what we have seen is in terms of the impact of the government spending, and government certainly realizes that the government spending is the last thing I think that will really kind of take off even this 4.5% sort of a growth, very shallow growth that we are seeing. So in which case, I think there was a lot of hope on the fact that BPCL, Concord, SCI and many other assets, I think in fact, there were big statements coming from the government this entire year talking about the fact that even some of the road assets via NHAI would be monetized. There would be port assets which could be monetized. There would be power grids, transmission and distribution assets which could be monetized. And there was a lot of land bank also which was was being talked about in terms of monetization. Forget all of that. I think if at all by March 2020, if there isn't a concrete proposal for at least the BPCL's disinvestment, I think that's going to really sour the sentiment a lot more. Because then the problem being that despite knowing the fact that government owns almost assets to the tune of 75 lakh crores in terms of many of the public sector enterprises, and them not being able to monetize even 50,000 or 1 lakh crore worth of those assets, I think would put India in a very shameful position, to be very honest. So I think let's keep fingers crossed that at least the disinvestment of one of the big names, which is BPCL, does tend to take place, and that also before March 2020. Otherwise, I think the fiscal deficit number will certainly look haywire, and that will probably spoil more in terms of India's macros.
I think there are two arguments coming. One argument also says that why should the government be in a rush to go out and disinvest if indeed it's not getting the valuation of the right buyer by March. But I think the counter argument to that from most people would be that there are bigger implications out here in terms of the fisc number and then how rating agencies view. And two, even if the disinvestment doesn't happen in March but happens in April, and again, I do not know the implications of whether it happens in the current year or no, and therefore what happens to the fisc. But my point being, if there is some clarity on how the progress is happening on the disinvestment process, that alone would be very welcome as well, even if the disinvestment happens a month later or 2 months later. But some progress, and as of now, as Sajid put out the other day, the Luminagar or the Lumigar refinery, which has to be sold, that hasn't happened in the first place. Forget the actual process of disinvestment, so of BPCLs, divestment of BPCL, Numaligarh refinery, okay. Yeah, so, the point is just that we don't have clarity on that either. I mean, what timelines are we talking about when it comes to these names? But anyways, that was one point. The other conversation, Parthiv, that is happening is around telcos, and most people are in a conundrum about whether or not it makes sense to go out and buy a Bharti Airtel or we'll talk about Reliance later, but Bharti Airtel particularly, Parthiv, now that a large portion of the rally is already behind us. Where are you on that argument? It's a question that we get asked every single day on every single show. Is the rally pricing in the positives?
Neeraj, very frankly speaking, especially for Bharti Airtel, I do believe at this juncture, a lot of positive is already factored into. Now, what we have to wait for is, after knowing the fact that all of these telcos have started raising rates, let us try and come out at the figure of what sort of ARPUs they are able to garner. And if the ARPU comes in the range of say 160, 170, and the ballpark estimates for whatever additional EBITDA generation that takes place, and more importantly, the cash flow generation that takes place, what sort of liabilities will it kind of help these companies to repay? And we know for the fact that, the government is very firm, and just we were discussing about disinvestment, and government is not going to allow any sort of its own revenues be deferred or delayed from these telcos, and government has made its stance very, very clear, in which case I think a company like Bharti Airtel, after the recent run-up, has also talked about raising funds through equity dilution, and that always puts some sort of break, because we know for the fact that this money that they're going to raise is not going to be used for future capex for 5G, etc. It's going to be mainly used for, I think, repaying whatever the penalties have been levied upon them. And another problem being that all these telcos will certainly over the next 2 years will have to upgrade their networks, and for that upgrade, again, there will be a capex cycle that will have to kickstart. And knowing the fact that, just very recently they're going to get some sort of relief in terms of the ARPUs. In fact, Bharti's chairman is talking about touching at least 300 rupees ARPUs in order for them to have a long sustainable story in Indian telecom market. So I think even if they're touching 160, 170, we are feeling happy of the fact, and the stock has rallied. Let's see how far-fetched the 300 rupees ARPU idea is. But I believe that at this juncture, no point buying any telcos, including Bharti Airtel.
Okay, it's interesting that Bharti Airtel has actually gone up as much as 59% on a year-to-date basis, and the last time it was hanging around over the level of around 450 rupees per share was back in early 2008, end of 2007, and of course it's been a stellar year. But well, let's take this conversation forward with my research team, because we do have plenty of stocks which are in focus, despite the fact that it's expected to be a relatively subdued week in terms of trade. But I do have my colleagues joining in. Good morning, guys. Nikki, as usual, I start with you. What do we have on your list?
I'm going to start off with a clarification coming in from Yale, which has said that the company is neither in the process of hiving off its pipeline business into a separate unit, nor has it received any sort of directive on that front. So do keep an eye out on this one. CG Power, where a ET report suggests that the company is looking to hive off or sell its overseas asset, and they're in talk with Japanese and European companies for the same, and the company has valued the global assets to a tune of around $250 million. Two bulk deals, interesting out there. Dushman Carbogen, now remember the stock has tanked quite a bit. In fact, 40% in the last 6 trading sessions, straight away wiped out from this counter. You have Motilal Oswal, which has sold in more than 1% stake as of the bulk deal that we had on December 24th, and Dixon, that's another one which is expected to be in focus, given that the promoter has sold in more than 0.6% stake in the counter. Now remember, in the last 1 year, we've seen promoter shareholding coming gradually down from September 2018 to September 19 itself. It's gone down by 1.5% for that matter.
Right. Well, moving on, Sameet, we have Infratel in focus.
Well, as the decision that we were talking about on Tuesday has come in, and Bharat Infratel has yet again extended the long stop date for the merger completion with Indus Towers by nearly 2 months to February 24th due to the lack of approvals that are yet to come in. They are yet to receive the final approval, that is the enhancement of the FDI limit from the government, and they have still not received this approval, and that's the reason they have extended the date of completion of the merger with Indus Towers. Now, the management in its release also said that there cannot be any assurance that the merger can be completed within this extended time frame. Now, do remember, this is the second time that the company has extended this time frame of completion its mergers, and already 20 months have been passed since the announcement of this merger with Indus Towers, which was to create the world's largest tower asset company outside China. Now, this decision will also have an impact on Vodafone Idea, because they were supposed to sell their 11.15% stake in Indus Towers post this completion, and they were supposed to receive close to 4,700 crore rupees from this stake sale, and the same was supposed to be used by the company to pay its debt and to fund its working capital requirements.
All right, Nikki, Sameet, thank you for joining us and taking us through, well, some of those updates this morning. But Parthiv, I'm going to come to you on a group of companies which has certainly done very, very well. That is the broking company, something like an ICICI Securities, which has seen a lot of momentum. We continue to see Motilal Oswal also in focus and in the news of late. What's your view here? And do you think that there could be an opportunity here? Because usually these companies do move in tandem with the benchmarks.
See, yes, I think very frankly speaking, amongst the brokerage industry, and I think we'll have to allow these companies, especially likes of say ICICI Securities, not to be looked upon as only companies which are into the business of brokerage, especially retail institutional brokerage, but also I think their investment banking arm, which is also I think a very, very important vertical. And I think very recently we had the data of the active clients of the top brokers, and just behind Zerodha was ICICI Securities with almost 9.35 lakh active clients. I think that is a huge market share, which is 10.3%, despite the fact that we have likes of Zerodha, which are like hugely discounted brokerages, and ICICI Securities is still able to charge reasonably well thanks to its technological platform that it has. And more importantly, I think this is a company which has almost halved from its IPO valuations. And at current valuations, I believe it's quoting extremely cheap. And I feel that, over the next 2 to 3 years, I think the way they've been constantly kind of upgrading the technology and constantly kind of focusing on digitization, I think there's a long way to go for them to have a perpetual model of fee-based products, things like mutual fund, insurance distribution through their platform, and even the securities business, which has been performing reasonably well. We believe that even the investment banking arm will tend to do very well as and when the economy picks up and we have more of primary issues where the green shoots are already being seen. And I think it's a business model where I think there's a lot of free cash flow generation. And with such valuations, I believe there's a long way to go for this company to give very good shareholder returns.
Okay. Well, on that note, it's time to get in our technical experts. We have Abhijit Phatak, Director at Definedge Solutions, joining us. Let's start with you, Abhijit. How are things looking right now, and what's your view on the benchmarks going forward?
Good morning, Agam. Yes, Nifty is looking a bit tired. It has resistance near 12,280, 12,260 spot levels. but it has a very strong support near 12,190 and 12,150. So it might trade in this range for the first couple of hours, and then the expiry action might take over. If 12,190 breaks decisively, then we might see another 50 to 80 point cut. But again, still it is a strong market, and I still believe it's a buy on dip. Stop loss will be below 12,100, but maybe today it might be a bit volatile.
Okay. Abhijit, so in light of that, I mean, if not just for today, but for the near term, wherein the volumes typically might be lower on the global front, but we have this expiry day today, what's the positional call on either the Nifty Bank or the Nifty? Do you believe the trend is still higher, or could there be a dip because of the resistances?
There can be a dip. See, problem is, let's see where it opens first. If it opens gap up, then it's a short. If it opens near 12,200, then it's a long. But after a couple of hours, if it is not able to cross the resistance near 12,250, 12,270, then again it might come down, and it might remain volatile in this 50, 80 point range for maybe till 1 o'clock, 2 o'clock. And then after that, I still expect a dip and maybe expiry towards 12,200, 220, that kind of level. But going forward, it is still a long for Jan series.
And in light of that view, then, what are the stock recommendations for the morning, Abhijit?
Yeah, I have one long and one short. Buying ICICI Prudential with a stop loss on a dip with a stop loss below 495. I expect that to go towards 515, 520. And one stock which has not done much in this rally is M&M Financial. That can be a sell on rise near 325 with a stop loss above 330. I expect that to go towards 315, 310.
So those are a couple of ideas from Abhijit Phatak. Abhijit, I was just looking at a set of stocks which haven't done too well month to date, and therefore wondering if you see that there could be some bit of either short covering or such moves into them. One of them is BHEL, which has corrected quite a bit in the last 1 month. The other one, which has remained very, very sideways and seen a downtick, is Colgate Palmolive. Do you expect movement in either of these two names today?
BHEL, I'm not sure, because if it goes below 55, then it can go to another couple of rupees lower. I don't expect short covering in BHEL as long as it is below 57. And the other one you said was Colpal?
Colgate Palmolive, yes.
Sorry, I don't track that, so I wouldn't be able to comment on that.
Okay, but interesting names. Let's see, Agam, if there is some bit of movement there, because these stocks have faced so much of resistance at higher levels.
Yeah.
But today might be a different day.
Yeah, absolutely. We'll be watching out for that. But speaking of technicals, onto a special segment, Bloomberg Edge, where Yash Upadhyay tells us about a pattern that the Bloomberg terminal has thrown up on the stock. Yash, what are you tracking today?
Morning, Agam. So we're looking at Raymond, and it has been under consistent selling pressure over the last 7 to 8 trading sessions, and there is a continuation of that trend that we are expecting, and that's the reason why the ADX indicator in particular that has given a negative signal, which is an indication that there could be further pressure on the counter. But like we always do, let's first try and understand what the ADX indicator is and how do you interpret it. The ADX is basically a directional indicator. It shows you the directional movement of a security by measuring its high and low price over the previous day. How do you interpret it? You go long or you go short whenever there is a crossover between the plus DMI and the minus DMI line. Now coming back to the price chart of Raymond, and on the daily time frame, we've seen that in the lower panel, the ADX indicator that has given a negative crossover. So the minus DMI line, which is the one in red color, easy to understand, has crossed above the plus DMI line, which is the one in green color. The white line, which is the ADX line, there too the reading is above the mark of 20. So typically whenever the ADX reading is above the mark of 20, it indicates the strength in the underlying trend. So we are seeing a substantial weakness in the stock on the daily time frame, but not just that, on the weekly time frame too there is indication of weakness, because the RSI too after hitting the mark of 70 has slowly and steadily come off and is now below the mark of 50 on the weekly time frame. And we are also seeing a sort of a formation of a death cross. We saw it happen a couple of weeks back where the faster DMA, which is the 50-week moving average, that has crossed below the 200-week moving average, and we've seen that this is the stock is on track for a 4th consecutive week of losses. So multiple indicators suggesting that there is weakness in Raymond currently, and to ride the trend on the lower side.
And in this case, Yash, what do backtested results indicate?
So again, 3 out of the last 5 times, with the current one being the 6th time, the indicator has given a negative call. The stock on an average over the next 1 month period has managed to fall close to around 7.5%. So whenever the indicator gets triggered, we see very quick move in the counter, and this time around too, we are expecting the same.
Okay, we will watch out. Do watch out for Raymond in the session today. Thanks, Yash, for putting that into perspective. Well, that is as far as some technical conversations go. We'll also get in a Sameet Chavan a bit later on to talk about his thoughts on what could some specific stocks do. But it's time to focus on the big boy Reliance Industries. Reliance Retail, the arm of Reliance Industries, is not going to hit the primary markets in a hurry. Employees who are sitting on shares of the company are being given the option to convert them into shares of the parent, Reliance Industries. The scheme of arrangement was uploaded on Reliance Industries website on December 11th. Sameet Sarkar is now here for more on this. Sameet, this in a way could lead to putting some bit of value for Reliance Retail?
Well, yes, but I'll come to the valuation later. But first, just let's understand what the deal is. So the deal is between Reliance Retail, some specified shareholders of Reliance Retail, and an entity named Parthiv Commercial Private Limited. So according to the scheme of arrangement, the specified shareholders, which are namely the employees of Reliance Retail, will get shares of Mukesh Ambani controlled Reliance Industries. Now, the scheme of arrangement was uploaded on December 11th on the company website, but no formal announcement was made by the company, that's Reliance Industries, on the exchanges regarding the same. So according to the scheme of arrangement, the specified shareholders of Reliance Retail will get 1 share of Reliance Industries for every 4 shares held by them. Now, these specified shareholders are the employees of Reliance Retail, which currently own shares in Reliance Retail Limited. However, these shares will not be issued by Reliance Industries. Instead, the entity named Parthiv Commercials will acquire these shares from the market and issue the same to the specified shareholders. Now, given the share swap ratio, the entity will have to acquire nearly 8.94 lakh shares. So here's the deal. The shares held by the specified shareholders are close to 35.8 lakhs, and the stake held by these shareholders in Reliance Retail is just 0.05%. Now, Reliance Industries shares, that entity Parthiv Commercials will have to acquire nearly 8.94 lakh shares of Reliance Industries, which will be then issued to those specified shareholders. Now, given the share price of Reliance Industries on December 11, that is when the document was uploaded, was close to 1,562 rupees, and the value of these new shares, which of Reliance Industries, that is 8.94, will be close to 140 crore rupees. So given the going by by extrapolating the value of this 140 crore, then the Reliance Retail's entire valuation comes to around 2.79 lakh crore rupees. How we have done this calculation? So the value of this 8.94 lakh shares is 140 crore rupees, and this 140 crore rupees is just 0.05% stake in Reliance Retail. So the 100% stake value of Reliance Retail would be close to 2,79,476 crore rupees. Now, this is according to BloombergQuint calculation. Now, this derived valuation of 2.79 lakh crore is nearly 14% lower than what the analysts have been valuing Reliance Retail. So if you see the average of 8 analysts that we saw, the average value is close to 3,25,000 crore rupees, and JP Morgan values Reliance Retail at close to 3,40,000, Bank of Baroda Capital at 3 lakh, CLSA at nearly 4 lakh crore valuation, Kotak Securities at close to 3.25, and Goldman Sachs at 3,51,500 crore valuation. Now, the average valuation of these 8 analysts comes to around 3,25,000 crore rupees, which is nearly 14% higher than the valuation at what Reliance Industries has been issuing. Now, this decision to implement the scheme of arrangement was taken after Reliance Retail received this request from the employees holding these equity shares for providing them an exit or some liquidity options for these shares. And as the company does not have any immediate plans of listing Reliance Retail, they chose to go ahead with this scheme of arrangement.
All right. Well, Sameet, thanks so much for getting us those updates. Just to give you an idea in terms of revenues, in the second quarter, Reliance Industries posted revenues worth 40,000 crores, which means on an annual basis, its revenues will be easily over 1 lakh crores. In terms of some of the listed companies already if you consider just the market capitalization, something like an Avenue Supermarts, its annual revenue is around 20,000 crores, which means that Reliance Retail is by far the largest, and it does not have a lot of competitors in the same size. What has come as a surprise is when you consider the value according to swap it's just a tad below 3 lakh crore rupees. Should the stock get listed, and it doesn't seem likely in the next 1 year or two, but whenever it does, I mean it's going to be at huge proportions, and this is something that a lot of people in the street are going to. But the important thing is, Neeraj, that even if you consider a lakh crore revenue on an annual basis, the profitability stands in no more than 1,000-2,000 crores. But that is something that the company will eventually work on. We must remember that being profitable and consistently profitable in the retail sector right now is a tad challenging. Yeah. But if you consider, if the company continues to do that, well, you never know where it may go, and 2 years, 3 years down the line, we may very well see another mammoth being listed on the exchanges out there.
Yeah, but that's time out. Well, we have a minute and a half left, and we'll get to Sameet, Chavan post market open. But Parthiv, since we're on this topic, quick thoughts out here. We have less than a minute left for the markets to kickstart. So in a nutshell, this slight valuation coming off for Reliance Retail, could that be a reason for further souring of the mood, which has been slightly tempered the last 2 or 3 sessions on the stock?
See, very frankly, Neeraj, I think we've been hearing of the fact that on the unlisted, market, a lot of trading had been taking place in terms of accumulation of Reliance Retail, especially after the investors saw what sort of valuations DMart got. And I'd heard even quotes of levels of 600, 700. And after this particular ratio that has been announced, it comes to ballpark around 450, 475, which certainly I think means that, what the market was expecting in terms of the current valuation multiple, because Reliance is also looked at as a sum of part valuation, wherein the retail arm was also ascribed a very high value of upwards of 3.25 lakh crore, which now comes to around 2.6, 2.7 lakh crore. But nonetheless, I think it's a great company. It's a great arm for the Reliance Industries and Reliance Group, wherein I think at 1.3 lakh crore of top line, which is growing at 25%. And the good thing is, which was rightly pointed out, that with the top line growth, slowly, gradually, the operating leverage is kicking in, and even the margins are slowly, gradually improving. So they are planning to list the company before 2024, which would create humongous for Reliance Industries.
Sure. All right, Parthiv, we'll be back, but let's address how the pre-open is going to pan out right now. So we do have gains in the Asian indices, but that's not reflecting in the SGX Nifty futures, which is currently trending marginally in the red. But what does that mean for the benchmarks? How about the pre-open? So, of course, we're going to have to wait for perhaps a few seconds before we start getting trends, but this is largely on expected lines. Very, very subdued opening, absolutely flat 4 now, which is indicative in the Nifty 50 as well as the Sensex. Sensex, of course, seeing a little bit of a spike now, but let's start by talking about stocks. Perhaps you can start with Reliance Industries, which has been weak of late. Over the past couple of days, it has been losing out to a certain extent, but that remains unchanged at this point in time. We have a bunch of telecommunications companies which are also in focus. So I'm going to get in Bharti Airtel, which is also unchanged. Do remember, it's going to raise a very small sum, but it is going to get listed on the Malawi Stock Exchange. Bharti Infratel, of course, on account of what Sameet had spoken to us, is looking at about a 0.5% gain. Vodafone Idea, again, up less than 0.8%. GAIL was in focus, where it has come out with a clarification with respect to, well, some diversification of a unit, but that is also unchanged right now. It's turning out to be a very, very quiet pre-opening, and we don't have too much to go for, at least as far as those stocks which are in the news are concerned. Very quickly, let's also take a look at some of these metal counters and see whether or not there is traction. Let's pull up Tata Steel, and okay, so Hindalco, of course, is down 0.3%. If we could also have Tata Steel for you, that's also down around 0.5%. And JSW Steel, which is unchanged, and JSPL, all these companies have been in focus of late. But so the metal companies are under a tad bit of pressure this morning. But again, this is pre-opening, and it's, like I said, it's been a very, very quiet one so far. Let's wait and watch whether or not things do change in the next 6-7 odd minutes.
Yeah, well, we will indeed watch out for that. Well, just a couple of names. I want to see if Shipping Corporation of India and Concor are reacting at all or no. We'll of course keep a clean eye out for BPCL. So that's the other one that we will need to monitor in the session today. And from the broader end of the spectrum, just a couple of stocks. Let's give these rates a chance to stabilize and then we'll talk more about them. But Kesoram amongst the principal losers in Tuesday's session looks like starting off weak in today's session. It's something that I would want to talk to Parthiv about. So do watch out for that stock. But let's give these rates a chance to stabilize. Something that Agam can maybe open on is Persistent Systems, 2.5% up, 688. There's some traction in that stock. Let's see if these rates are indeed the final rates or no. But we'll give these rates a chance to stabilize. Now, before we get in Sameet, Chavan, very quickly, let's bring in Sameet yet again, but this time around with the top brokerage calls of the day. Sameet.
On the big brokerage call today, we have Equirus on oil marketing companies. So they have initiated coverage on all the three oil marketing companies, that is Indian Oil Corporation, BPCL and HPCL. Now, according to the brokerage, they're expecting a cyclical uptick in the refining margins driven by the IMO 2020 regulation and below than expected capacity addition beyond 2021. Now, along with this, higher distillate yields and upgrades would help Indian refiners generate stronger refining earnings going forward, says the brokerage. Now, it also is expecting steady demand from India when it comes to fuel, and it is saying that there won't be any major market share losses and the marketing margins would remain stable going forward for the oil marketing companies. Now, they are preferring Indian Oil Corporation and BPCL over HPCL given the likelihood of higher GRM expansion, stronger earnings growth and better dividend yields. And HPCL is the least preferred among the state-owned oil marketing companies due to significantly higher capital expenditure planned by the company and because of its rising leverage, that is net debt to EBITDA. Now, for Indian Oil Corporation, it's a long rating with a target price of 176. For BPCL, it's an add rating with a target price of 572, and for HPCL, it's a reduced rating with a target price of 273.
All right, Sameet, thanks so much for getting us those brokerage calls for today. But let's get it, Sameet Chavan, Chief Technical and Derivatives Analyst at Angel Broking. Sameet, good morning and thanks for joining us. Let's start by taking your view on the markets, the benchmarks. In this case, how would you address them?
Good morning, Agam. See, after seeing a relentless move from the levels of 11,800, nearly 500 points, relentless move, we saw index, slipping into a consolidation mode, and this is what we have been seeing since last 3-4 days, and this might continue also, for next few days. So on the low side, 12,150, 100 remains to be a very strong support. On the higher side, you would see some kind of profit booking coming in somewhere around 12,300, 12,350. Yes, over the next few weeks, we would expect slowly and gradual move towards 12,400, 500, but the pace at which it had come in the recent past, it will not be the same for next coming weeks. So for here, our strategy would be for the day. The strategy would be in the first half, we would avoid any kind of trade in index. We would rather let prices stabilize, and in case if we see any kind of decline towards important support level of say 12,180, 150, that would be a buying opportunity, and then again we would expect a move towards 12,280, 300. But in case in the first half itself, we would see Nifty moving towards 12,280 to 12,300. We would rather avoid any kind of longs. So index specific, there's no major trade setup as such. One should clearly focus on individual stock, and there are stocks from the broader market also that are providing better trading opportunities.
Okay, and well, speaking of stocks, Sameet, anything that you like or anything that you find interesting today?
Yes, we have 3 calls. 3 would be on the long side. 2 would be from the cash segment. First one is Kalyani Steel, which has been consolidating of late, and on Tuesday we saw good move in this counter. And if you look at the overall volume activity, it has risen substantially. So that suggests that from here on the stock is likely to continue its northward trajectory. It can be bought at current level. 260 would be the target, stop loss at 229. Second buy would be on ICICI Lombard, which has been a traders, investors delight since last many months now. It has been maintaining its sturdy structure, a series of higher highs, higher lows, and on Tuesday we saw the stock resuming its uptrend. So from here on we would expect extension of this move. 1490 is our target, 1402 would be the stop loss level, and third buy would be on UBL, which has been clearly buzzing since last 3-4 days. In fact, on Tuesday we saw massive rally in this counter. So from here on, we would expect continuation of this move. Stock is likely to climb towards 1345. It can be bought with a stop somewhere around 1260.
Some underperformers coming to the fore, and the liquor companies like UBL certainly out there. The year has been a washout, but for now, doing okay for themselves. As we look at the broader end of the spectrum, Higashi Motors is one stock that catches the eye, up another 3% today after having a fabulous last 2 or 3 sessions. Sameet was talking about how some mid caps have done well. Higashi Motors is right up there. We'll ask Abhijit, Phatak about the positions out there too, but first, I want to go to Parthiv on the fundamental piece out here. Parthiv, a lot of these mid-sized auto-related, auto component stories have started doing very well. Jamna Auto, a case in point, Higashi, a case in point. Do you track Higashi Motors fundamentally? What's happening here?
Sorry, Neeraj, not tracking Higashi Motors, but yeah, talking about the general auto ancillary space, what we've been seeing is after the massive cuts and massive derating in terms of the valuations, now some sort of green shoots are emerging in terms of accumulation in some of the quality names, where we know for the fact that the cyclical turn will play out for the good, wherein even things like in the CV segment, where Jamna Auto is very big in the spring segment, and certainly I think they are also trying to innovate, cost cut, and all these companies have done extremely well in terms of trying to maintain their margins, cost cut, and whenever things improve and the volume growth reemerges, what we're going to see is this cost cutting is certainly going to help, and a lot of operating leverage would kick in. So some sort of accumulation is taking place, but I still feel personally that it's like early days. We'll have to see from the OE segment what sort of traction is getting taken place over the next 2-3 months, post which I think it'll be better to take a call on the auto ancillaries.
Okay, well, speaking of that, Abhijit, your view on Higashi Motors, anything that stands out? Would you buy this stock? It's only in the cash market right now.
Yeah, it has a resistance only near 355, 360, so it can go towards there, and in fact above 360 it can go even towards 400, 410. This momentum is quite strong right now, so there is no harm in riding it. The stop loss will be below 320 kind of levels, but 355, 360 is the resistance on it.
We'll watch out for these. As the pre-open rates settle down, the top loser on the index turns out to be Axis Bank. It's just a small gash, but it's down about 0.5%. Remember, we spoke about this, one of the papers, I think Mumbai Mirror or some of the others was talking about how a large portion of accounts, the Mumbai police accounts, if I'm not wrong, will go away from Axis Bank. I don't know if that is playing in on the mind of the stock, but it's certainly down about 0.5%. That or some of the others, news flow. But Parthiv, just come in while ICICI Bank has crossed some hurdles and moved ahead and done very well. Axis somehow is caught in this limbo, maybe due to the overhang of the Suti stake sale or news like this or otherwise. What do you make of this piece of news? And very quickly, would you be a buyer in Axis fundamentally?
We are certainly very positive on Axis over the next 2 to 3 years. This is a bank which is extremely well capitalized, and yes, this piece of news might have a slight sentiment dampener, but I believe that any downside should be used for accumulation, because I think they've done a lot of fundraising. No doubt there was some disappointment in terms of the pricing of the last QIP, which got diluted at a very low rate, but nonetheless I think they're sitting on extremely well capital position, and the management pedigree and the prudentness in terms of them not going out and lending recklessly but being selective, I believe is a good strategy in the banking segment at this juncture.
Okay, well, minutes away from market open, let's tell you all that you need to know to stay ahead in trade today. First up, Reliance Industries to issue 1 share for every 4 shares held by few specific shareholders of Reliance Retail. As per a BloombergQuint calculation, Reliance values its retail unit at 2.79 lakh crores, slightly lower than what a few analysts were pegging it at.
Bharti Infratel's merger with Indus Towers is delayed further. The long stop date for the same was extended to February 24 due to a lack of approvals.
Bharti Airtel's African arm will sell 20% stake through an IPO at $0.02 per share. Shares will list on Malawi Stock Exchange.
And GAIL has clarified that it is neither in process of hiving off its pipeline business into a separate unit, nor has it gotten any government directive for the same.
And in key bulk deals, Motilal Oswal AMC sold 1.5% stake in Dushman Carbogen at 73.8 rupees per share. The stock was locked in lower circuit on Tuesday.
Okay, well, let's get in talk about Adani Green. I know we've been talking enough about that, but it does seem, according to pre-open rates, that it's set for another 5% up move, and there's just no stopping of the stock. The real question is, can we start becoming a little more cautious about this one? Sameet, your view on this one, Adani Green Energy, would you perhaps be a little more cautious, or do you think there's more momentum on this one?
See, Agam, there has been a relentless move. As you pointed out, there has been no stopping. Gravity-defying moves can be seen over the past couple of months. But historically, there's no major movement as such. Before 3 months, stock was consolidating in a range, and in last couple of months, only the momentum has picked up. But stock has entered an uncharted territory, and we don't have much historical data also to analyze. But momentum is strong. Those who have bought it at lower level, they should now keep their trailing the stop losses higher. Now 140, 145 seems to be very strong support. So those who have bought it at low level, they should trail their stop losses somewhere around 140. But yes, the low hanging fruit is already gone, so fresh buying is not advisable at current level.
Okay, Parthiv, before we thank you, it's almost the end of the year. I know we've discussed a number of ideas. It may be a repetition, but one name that you're completely convinced of that you would go out and make an investment in today.
Yes, certainly we have discussed a lot of ideas this year, and my sense is that I think now from the listed space at this juncture, to be very honest, we are lacking in terms of conviction, in terms of new ideas, but not, I think, disappointing you, but very frankly speaking, we are looking forward to two important IPOs. One is SBI Cards and second is HDB Financial, which probably one is expecting to happen before March 2020. And after reading out SBI Cards in detail, we find a lot of conviction that this business, I think, is a must own because being the second largest market cap company, and more importantly, the growth that this company can show going ahead, I think it will deserve a lot richer valuations than probably it would come out in terms of its IPO. So I think this is a company that I would like to alert a lot of viewers in terms of putting on radar and having it in terms of their investment portfolio for at least next 3 to 5 years.
Okay. Okay, Parthiv, we'll leave it at that. Thank you so much for joining us and taking us through your views on the markets today. But moving on, we have about a minute left for market open, so I'm going to take top picks from our experts. Sameet, to you, your top pick for now.
I'll go with UBL. It is opening with marginal cuts, so that would make it a good risk-reward ratio. So I'll go with UBL for a target of 1345. Stop would be around 1260.
Abhijit, same question to you, your top pick for today.
Yeah, if market opens higher, then short M&M Financial for a target of 315, stop loss 325, 330. And if market opens lower, then buy ICICI Prudential with the stop loss below 395 for target 410, 415.
Okay, so conditional calls, both of them. Maybe what we can do is request Abhijit and Sameet to stay on for just a moment longer, because we can actually check post-market open as to what Abhijit would do with his ideas. Maybe Sameet can throw up on light on some other stocks which have started moving as well, because 7 seconds left for the market, so kickstart trading, if the pre-open rates are to be believed, will start off very, very flat. But here are the first rates on the market open, very flat. Look at that. The Nifty 50, 1 point in the red. The Sensex about 9 points in the green. And the Bank Nifty, 10 points in the red. 0.01 or 0.02% or thereabout are the kind of moves, really. Very flat start. Doubt that the mid caps and small caps will be doing something materially different. Yeah, 0.12% in the green for the mid cap space, the small cap space about 0.16%. So no big moves, but I reckon no big losers either, which might not be a bad sign. Let's get the heat map up on the screen. More green than red, if that is any solace. And let's talk about the winners first. Tata Steel up about 0.5%. UPL is the top gainer, 0.77%. Mahindra & Mahindra 0.6%. It's had a pretty decent last 2 or 3 sessions. Small gains, but gains nevertheless. Nestle is up, Hero MotoCorp is up, Titan is up, Dr. Reddy's is up. But you don't see the big boys in the top 10. There's no Reliance in the top 10, no HDFC Bank. There's a Bajaj Finance, but it's not really a big boy, 0.37%. but all of those are absent. Are they losing out? Let's try and figure that out. Bharti Infra is the top loser, by the way, down about 1%. Yes Bank down, Reliance down about 0.5%. Axis Bank down about 0.5%. There is a weakness in ONGC, Z and Bajaj Auto, but no big cuts. The biggest gainer is UPL, up about 1%. The biggest loser is Bharti Infra, 0.67%, so hardly any moves there. Maybe the broader markets have some moves. And before I hand it over to Agam, let me just quickly point out a couple of trend makers, if you will, which might be interesting to monitor. Firstly, on the back of what happened in Friday's session with regards to the divestment news for BPCL, let's see how those stocks are starting off. BPCL flat. Concor, the other one, actually BPCL margin in the green as well. Concor just about 0.5%, and Shipping Corporation of India down about 0.5%. So no big cuts today in these stocks. What about stocks which are gaining in Tuesday's session? And let's see what those are doing. So Adani Green, yet another 5% for this one, 156. The market capitalization for this has gone very high. The valuations are extremely high, but hey, the stock is performing. Deepak Nitrite just starts off flattish, but Navin Fluorine sees no such tentativeness, up another 0.77%, 1,020 or thereabouts for this one. So, well, some of the stocks continue to do well. Agam, I doubt there are enough performers like Adani Green, but what are you spotting?
There's a little bit of covering for some of these ADAG companies. So you have something like a Reliance Infra or a Reliance Capital. They are both advancing and doing reasonably well. Of course, these are not very highly priced stocks, but well, doing well all the same. We have gains in something like a PC Jeweler as well. That is up around 3%. Something like a Sheela Foam that stands out, that's advancing by around 2%. So, and of course, Dishman Carbogen has just strengthened from a few minutes ago. So now it is now up as much as 7%. And that's almost 8% now. Again, a case of covering, considering the kind of weakness that Dishman Carbogen has seen of late. To talk about the losers, you do have weakness in Hatsun Agro Products. That's down 2.5%. United Breweries is looking at a decline of 1.6% as well. So it's under a tad bit of pressure. SL Propack down around 1.3%. However, if you consider just the NSE 500, there are 2 gainers for 1 loser, and the momentum is clearly with the gainers for now.
Well, opening thoughts, the markets, Abhijit, unfortunately have neither started higher nor started lower. We started extremely flat on open. Any observations, anything on the calls that you've given?
Only on the Nifty, right now it is 12,211, so maybe any dip towards 12,200, 205 can be used to buy with a stop loss below 190, 185. And I'm not expecting a big rise, maybe up to 230, 12,230, 12,240.
Okay.
During the day.
All right, and a question on United Spirits. The reason why I bring this up is because while United Breweries is down, United Spirits has seen some sort of traction of late. It's flat right now, but I do want to address this one. Sameet, in your view here, anything that stands out for you in United Spirits?
No, clearly, this particular stock has seen no momentum in the recent past, and that is clearly getting reflected in the prices as well. Stock has stuck in a very small range of 20-25 points, 610 on the high side, 580, 575 on the low side. So if this stock has to gain any kind of strength, if it has to trigger any kind of upward rally, then stock needs to surpass its higher end of 610 and the volume needs to pick up. So if this happens, then only we could see some kind of strength or rally in this particular count.
Okay, and just wondering, Sameet, your opening thoughts, anything that stands out for you?
No, I think clearly we would avoid taking any trade on index today, probably in the first half at least. We would go with individual stocks and something from the broader market that looks quite encouraging. Star Paper or paper stocks have done well in last couple of weeks, and this is the stock which has been consolidating since 3-4 days. And today we are seeing resumption of its uptrend. It's on the verge of a breakout, so we would expect Star Paper to do well in next couple of days. Stock can be bought at current level for a target of somewhere around 130, 135, and stop would be somewhere around 160.
Okay, on that note, I will take a moment to thank both our technical experts, Abhijit and Sameet, for joining us and taking us through their views on the markets. But let's shift and focus to fundamentals. We have Chakri Lokapriya, Managing Director at TCG Asset Management, who is joining us this morning. Chakri, good morning. This is around the time when we start once again taking into consideration the earnings, what we can expect. We are heading towards the last week of trading, and eventually we will head into earnings season. What's the way forward here in terms of your expectations and how markets are currently?
I don't know if...
Chakri, this question, if you can hear me, my question was with respect to your expectations for the upcoming earnings season and how markets are at this point and what they have priced in.
No, I don't think Chakri can hear us. But it will be important to get an assessment from him because he's largely been bullish.
Right.
He's been bullish on the broader markets too, but he's largely been bullish. He was bullish on banks when most people weren't. So
Right.
those calls have paid off. But his bullishness on the broader markets has been very, very selective in
Right.
terms of getting paid off.
Yeah.
Large swaths of the broader market still under pain. It'll be interesting to get a sense from him as to what he thinks of where is he putting his money on.
Yeah, you know, Neeraj, I mean, of course, we all know about what Unilever had to say with respect to Hindustan Unilever specifically. And based on that, a bunch of brokerages were suggesting that on a year-on-year basis, volumes growth could come from 10% to as much as 5%. Earlier in the year, a lot of consumer companies were suggesting that the first and the second quarter may have been good or may not have been good, but there could be some improvement. But after what Unilever is saying, and considering Hindustan Unilever is the largest FMCG company in India, that there very well may be concerns with respect to top-line growth. And if that doesn't come through, obviously, EPS will also be under a tad bit of pressure.
Okay, so this is specifically for regards to HUL.
HUL, and because of the fact that it's such a large company, well, it may give us some sort of an indication as to how the FMCG sector in India as a whole may do. But I mean, you can't always draw parallels between HUL and some of the other companies because of the size and, well, the base. That said, it's still some sort of an indication as to how consumption can pan out for India in this ongoing quarter.
Yeah, it'll be interesting. But if HUL is seeing pain, then some of the others will definitely see pain. I think the distinction only is that when an HDFC bank goes out and says that they are starting to see some uptick in rural, that would be very selective simply because right now there are only these 4 or 5 banks or financial institutions which are able to do the lending. Most others are struggling for survival capital. So what's happening with FMCG and their commentary on rural recovery might hold true for that space at large.
Right.
What the commentary coming in from a bank like HDFC Bank or Bajaj Finance is probably holding true only for them and not necessarily for the space at large because they have the muscle right now to grow where the others financial institutions don't. So it's an interesting mix.
Well, you know, speaking of consumption too, even if we consider how things are panning out in the discretionary space, of course, we do know about Maruti seeing an increase in production in the month of November up by as much as 5%. But we must remember that firstly, it is on an extremely low base. Secondly, that a lot of analysts weren't really ruling out an increase in production. But that said, it's actually sent Maruti to levels before or around, it was just starting to see a crisis coming through. If we can pull up Maruti Suzuki and see where it's currently trading at, it'll give you a picture of this. So it's at around 7,300 rupees per share. And people are already factoring in some sort of a momentum building in. Of course, we'll continue to keep an eye on, well, how things are panning out. But I do believe we have Chakri back with us at this point. Chakri, good morning. This is Agam, if you can hear me. Well, my question really was to do with the earnings outlook for the upcoming quarter, as well as to what extent the markets have priced in these earnings. What is your view here?
I think, good morning, post the corporate tax cut that has happened. So that will clearly bump up earnings for all companies across sectors by roughly about 10% or so. So this is going to, and also post the Operation Twist, which the RBI did, it's kind of lowered the borrowing on the long end of the curve, which is where primarily most of the borrowing for Indian companies is. So, and I think that they will have to do, and probably will do, some more Operation Twist to continue to ensure they bring down the long end, which is bringing down the interest expense of companies. And all this will lead to an effort in improving the EPS outlook for the third quarter. Now, against this backdrop, earnings for the third quarter is likely to be weak for various sectors. But in the case of autos, they'll probably be slightly better than expected. Banks probably in line. Metals were probably in line. Whereas some other sectors like utilities and all is likely going to be worse than expected.
Chakri, good morning. Neeraj here. Would the overarching bent be towards the broader markets for 2020 or no?
I think the overarching trend, yes, you're right, is likely to be the broader markets for the simple reason that now it's a well-known debate that it's been the rally for this year has been very narrow, contributed not just by the Nifty, but within the Nifty by a handful of about 10 companies. Now, and any rally broadens out as the economy kind of bottoms out. So I think we are in a point where, post the corporate tax cut, RBI, continuous actions by the RBI, etc., NPA cycles, all of the good work that has been done will start kind of showing up, but not in the third quarter, but probably towards the second quarter of the next financial. So against that backdrop, that's when broader markets will, ahead of the curve, will start doing well. So I think, yes, the earnings recovery is likely to be slightly more in the broader markets, and they'll begin to participate.
Right, Chakri, there's another theme which is starting to emerge. I mean, it's been around for quite a long time, but I'm talking about the internet-facing stocks. So on one hand, you have something like an InfoEdge. On the other hand, you have something like a Just Dial. Then you have IndiaMart, which is an online, and along with something like perhaps, of course, I've already mentioned Just Dial. But how are you going about some of these companies? How are you going about picking some of these names in those which are facing the internet right now?
Yes, indeed, that's a good question. India has seen a fair degree of unicorns that have come about in the last few years. So against this backdrop, you mentioned InfoEdge. They have several good properties within their portfolio of investments. And so it is likely that companies, and they have been very successful in not just identifying investments, but also doing the follower fundraising and then sustaining valuations, which is very important in investing in such businesses, because these are, end of the day, unvalued, private companies, and therefore the valuation yardsticks are slightly different from that of the listed yardsticks. So against that backdrop, I think I would rather stick to the info edges of the world, which have a portfolio approach to participating in the e-commerce space.
Okay. Chakri, the last three sessions, we've spoken about this on the charts with our experts, but I just wanted your fundamental view. The last three sessions, we've seen re-emergence of sorts of some of the auto ancillaries. Is there merit in trying to own this space? I mean, the outlook on auto itself still not completely clear, still mildly hazy. Would you go out and buy the second-rung ancillaries?
See, the auto ancillaries being primarily smaller companies than the mainline auto companies have fallen much more. The valuations are far more attractive. But on the flip side, they also have some of the better run or larger auto ancillary companies have diverse revenue streams where they supply products not just to four-wheelers, but you would have the same company supplying to both four-wheelers and two-wheelers. And therefore, in a way, they are diversifying within the auto industry. And second, they also have some of the companies which have like Minda or Motherson, these have both export revenue as well as domestic revenue, further buffering the downside. So against this backdrop, I think, in this coming quarter, third quarter, we are likely to see some of the auto ancillaries begin to show up a revival of sales of revenue at the top line, which will flow down to the bottom.
Okay. Chakri, I'm sure you must have heard about Unilever indicating weakness in the South Asian markets, and that would, of course, include India, considering being the largest market. If we were to go with analysts' expectations of around 5% volumes growth, my question then is, can we project that to the entire FMCG sector? Which means, then my question is, can we expect that subdued growth in the entire FMCG sector as a whole, perhaps expecting about no more than 5-6% volumes growth that may impact revenue?
I think the FMCG sector is a combination of both rural and urban demand, and And the fact that it's a well-known fact that both these urban and rural had slowed down. On one hand, the valuations have kind of gone fairly up for some of the frontline FMCG companies. Now, against that backdrop, you are now they have had some raw material costs inching up in the last quarter or so, palm oil, for instance. So against that backdrop, I think you'll have the larger companies focusing more on a volume market share rather than trying to compete, rather than a pricing differentiation strategy. So against this, it's more largely operating measures which will try to bring down costs. There is no pricing power really, so it's more a volume game. So I would actually stay away from some of the FMCGs given the evaluation.
Just monitor this. Chakri, my last question to you. We're seeing some continued traction in some of these specialty chemical names. Aarti Industries is up another 3.5%. Some remarkable moves there on that stock. Navin Fluorine is up as well. So people are, even at the end of the year, going out and buying this segment, which has done well. Chakri, as we wrap up this conversation, just one final comment on whether you believe the momentum in the space, which has been there now for the last 4 or 5 years, could well continue going ahead, fundamentally.
Yeah, I think the short answer is yes, the momentum will continue, and for fairly diverse bunch of reasons. One is many of these well-known companies have both domestic and export revenue. Exports are doing fine. Second, they today have a bouquet of portfolio of products which kind of diversifies their revenue streams. And three, their valuations had gone up, corrected, and now looking fairly decent. So against this backdrop, chemical companies, yes, we find them attractive going into 2020.
Okay, Chakri, we'll leave it at that. Thank you so much for joining us and taking us through how you are seeing markets going forward. Well, we'll leave it at that. But up next, we talk about the rising competition in the cooling space with B. Tyagarajan of Blue Star and the business outlook with Altaf Jivani of Wellspun India. We'll be back in just a bit. Stay tuned.